Joining us now is Barton Crockett from Rosenblatt Securities. Barton, welcome. So from the September event, that awe-dropping event when it was trading at 226, now it's at 262. So a kind of nice switch there. You're still neutral on it, but is Apple addressing enough of what the consumer wants that maybe this AI delay doesn't matter as much as the naysayers thought?
You know, it's hard for me to get to a place where I'm going to argue that Apple is going to be growing earnings per share sustainably in the 20 to 30% kind of range that would really be supportive of the 30 plus, nearly mid 30s kind of PE it trades at right now. So it's a great company. It's not going anywhere. You can put a premium multiple relative to growth, but I think we're kind of at the high end of past ranges, and I don't think the growth trajectory has kind of changed so much that you need to chase it here.
What does it say about either the strength of Apple's ecosystem or the relative weakness, perhaps, of the AI features of its rivals that others haven't been able to take advantage of Apple Intelligence fumble and make it hurt here?
It's a really interesting question. I mean, obviously, the Android, Google kind of universe are, marketing their AI features front and center, and yet the share isn't really switching. I think that the consumer is still learning about AI, and they're able to get a lot of the features that they're interested in through the apps. It doesn't have to be built into the phone. So for now, consumers are buying based on the camera, based on the battery, and Apple's doing really well with that, particularly in their latest kind of version of the phone. I think the question is, in the future. And, I think if you look at the product roadmap for some of the new devices they're considering and, what's going to happen with the smartphone category, their AI kind of, stumble is going to loom larger unless they're able to figure this out. And, some of what we're seeing in terms of their inability to kind of hire staff competitively raises some questions, we think, longer term.
So, Barton, if I shift gears here, what are you going to be watching for when Netflix reports earnings this time tomorrow? So
Netflix has had one of the most amazing content quarters, really, in its history. By one measure, if we just look at views for content that's been ranked top 10 by Netflix's own kind of measure, the views are up for that content over 20% year over year. That's better growth than they had even in the fourth quarter, which was an explosive upside quarter for them. So, we're looking for evidence that they've got a lot of consumer traction. That evidence will be harder to see, though, than it was in the fourth quarter because they're not giving us subs anymore. But I think on balance, good traction with content and consumers argues for, a beat and raise period where they could do better than the guide and they can, guide the street up for the next quarter.
That darn K-pop Demon Hunters. It's on in every person's house that has kids, I swear.
Popular costume, I think, this Halloween as well.
Yes, that's right. Okay, so in light of that, do you buy the company, you buy the stock here ahead of earnings or coming out of earnings?
Yeah, I think you can own Netflix here. I think their execution is tremendous, and I think the quarter setup is great. It's historically great, so I think it makes a lot of sense to own Netflix here.